Hi friends, we are going to have a quick recap of segment 5, that is exemptions under GST. So in this exemptions chapter, there are a lot of provisions. What you need to do is that you need to just listen to this video as many number of times as you can, because mainly in exam, so they will be connecting this exemption here there with respect to some main questions, that is 14 marks question, as well as a standalone question for 10 marks or 5 marks is also possible on exemptions chapter. And in this exemption services, so exemption with respect to services is only there in syllabus, but exemption with respect to goods we don't have in syllabus. So section 11 of CGST Act, also section 6 of IGST Act. So the power to grant exemption is with the government on the recommendations of the council from time to time can come out with the notifications by way of giving exemptions. And section 11A read with section 6A of IGST Act says that as a past general practice, so they will be able to give the exemption. That is, if a particular transaction was not subject to GST in the past, and suppose by way of notification or amendment if it came, the government is having rollback power. So that rollback power is given under section 11A. Then the first area what we have in exemptions is agriculture related services. The first point what you need to remember is any service in relation to agriculture or agricultural produce is exempted. So mainly what you need to understand is that these process, agricultural process what we carry out should be within the farm. So because there is one past exam question which says that if the agriculture operations is carried out in a factory, so of some person, that is not covered under the exemption, it should be within the farm mainly. And agriculture means cultivation of plants and rearing of all life forms of animals. For what purpose? For food, fiber, fuel, raw material or any other similar products. And it's not only cultivation of plants but also rearing of all life forms of animals. And then agricultural produce. Agricultural produce means what? The primary produce out of agriculture on which no process is carried out, or some process as is usually carried out by a cultivator, which does not alter its essential characteristics but makes it marketable for primary market. So that is known as agricultural produce. So, but the process should be usually done by a cultivator or producer. But suppose if the paddy to rice, paddy is agricultural produce but rice is not agricultural produce, because rice will be done in the rice mills due to that reason. And even though rice is not an agricultural produce, but in relation to rice we have 4 activities which are exempted. So loading, unloading, packing, storage and warehousing of rice is exempted. Then artificial insemination of livestock excluding horses. So livestock do not include, because even in case of agriculture we don't have rearing of life forms of all animals except horses is given. So therefore artificial insemination of livestock other than horses is exempted. Then 5th point, service by way of storage or warehousing of cereals, pulses and even minor forest produce. Cereals and pulses and minor forest produce is not agricultural produce, but its storage will be exempted. And what about the warehousing of fruits and vegetables? Of fruits, vegetables and other agricultural produce is any service in relation to agricultural produce which is already covered in the first point, and therefore it is exempted. So this is about agriculture related services. Then insurance services. Point number 1, service of life insurance business provided under National Pension System Trust. If they collect any amount of premium, that is exempted. Just remember National Pension System Trust. Then group life insurance services. So only Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces. So these 4 group insurance funds is only exempted. Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces. But other group insurance fund will be taxable. We have one more exemption there, that is with respect to motor vehicle accident fund. So usually insurance companies will be members of the motor vehicle accident fund. So whatever premium they collect out of that, a third party premium will be deposited into the motor vehicle accident fund, and using that fund money will be paid to the people who suffer the motor vehicle accidents. So that is this contribution collected by motor vehicle accident fund maintained under Motor Vehicle Act from insurance companies. Usually insurance companies pay third party premium collected from the insured into such fund, and that third party premium which is collected by the insurance companies will be taxable, and whatever they contribute into that fund, so government will maintain that fund, the money received will be exempted. Okay, so however third party premium collected by insurance companies will be taxable. Then when it comes to C point, there are some general insurance services which are provided by the government or any private insurance company, but that scheme should be notified by government. So there is an insurance company which is providing general insurance services, but those schemes are notified by government. Government notified schemes targeted to agriculture and farmers, below poverty line and women. Nirmaya health insurance, you need to remember, is also exempted. So these are the notified schemes. Then in case of life insurance also we have something of this sort. life insurance under various government schemes. How you know that it's a government scheme? Scheme ends with the word Yojana, Pradhana Mantri Bima Yojana, like that. And micro life insurance, but not all micro life insurance is exempted. Micro life insurance having a maximum sum assured of 2 lakh rupees. Then insurance services provided to government. So whenever services, it can be life insurance service or general insurance services provided to government for which premium is paid by the government is exempted. So that is this here, provided to government means the premium should be paid by the government. Then next one, we have insurance services, that is life insurance or health insurance services to individuals or family of the individuals will be exempted. But what if it is provided to employer-employee group or non-employer-employee group and all? So that is like commercial or business, then it will be taxable. So only in case of individuals or family of individuals as a group, then it will be exempted. Then reinsurance of any exempted insurance service also exempted. For example, there is an insurance company here which is providing insurance services to government, that is exempted. Its reinsurance is also exempted. And reinsurance include retrocession. Retrocession means further reinsurance with another insurance company. So reinsurance include retrocession, that is reinsurer further transferring this to another reinsurer. So if reinsurance is exempted, retrocession is also exempted. Then business facilitator or business correspondent of an insurance company who is earning commission from rural area branch is exempted. However, subagent of that business facilitator or business correspondent is not exempted. So that is taxable. Only business facilitator or business correspondent to insurance company in rural area is exempted. Then third, banking and other financial services. In that the first point, transaction in money. Transaction in money is divided into two. Transaction in money for a separate consideration, without separate consideration. If transaction in money is without consideration, so it is neither treated as goods nor treated as services. But what if the transaction in money is for a separate consideration? It will be treated as service. If that separate consideration is by way of interest or discount on loans, advances, deposits, it will be exempted. But if it is on account of other consideration like debit card, credit card charges, NEFT, RTGS charges, including interest on credit card, then it will be taxable. Then number two, business facilitator or business correspondent or agent of business facilitator or agent of business correspondent earning commission from the rural area branch will be exempted. Third, services provided by bank to basic savings account holders under Pradhana Mantri Jan Dhan Yojana, any service provided by bank to those account holders will be exempted. Then foreign exchange transaction between banks or between forex dealers, between banks and forex dealers will be exempted. Only between banks or forex dealers and their customers, then only it will be taxable. Then fifth point, there is an acquiring bank. That acquiring bank is providing services by way of doing the settlement transactions. So payment settlements they are doing, and for doing that they will get a processing charges. So if it is card transaction, and if the card transaction is up to 2,000 rupees per transaction, whatever processing charges that is collected by the bank, so GST is not applicable, it is exempted. But suppose the transaction amount is beyond 2,000 rupees, they need to pay GST on the entire processing fees. Processing fees will be there, but the GST on processing fees will be exempted. And what is the meaning of acquiring bank? That not necessary it should be the main bank, it includes even the payment aggregators like Razorpay, PhonePe, etc. also. They are also covered into this. But in addition to the processing charges, they will be collecting gateway charges. So suppose if processing charges are collected, same treatment for a transaction up to 2,000 rupees, it is exempted. If the transaction is beyond 2,000 rupees, it is taxable. But if it is payment gateway charges, whatever may be the amount, so the transaction amount may be up to 2,000 or beyond 2,000, it will always be taxable. Then there is an intermediary who is located in a multi-service SEZ, and they are providing services to their customers outside India, and they deal with currencies other than Indian rupees. So that intermediary in India is exempted from payment of GST. So services by an intermediary of financial service located in a multi-service SEZ with IFSC status to provide services to their customer located outside India for international financial service in currencies other than Indian rupees. Nowhere it is given that the consideration that they have to receive should be in Indian rupees or foreign currency. So it may be in Indian rupees or foreign currency, because that condition is not given. They should deal with currency other than foreign currency is given, but that does not mean the consideration should be in foreign currency. And their services will now fall under export of services. Okay, so their services shall fall under export of service as place of supply is location of recipient. So it is not location of supplier, because now there is an amendment which says that The place of supply in case of intermediary service under section 13 is general provisions. So due to that reason it will be location of recipient. So their services shall fall under export of service, as place of supply is location of recipient under section 13 subsection 2, because now intermediary services is now covered under general provisions. As it is covered under general provisions, therefore location of recipient in the records of supplier will be taken. So here supplier in India, recipient outside India, place of supply is also outside India. If the consideration is in convertible foreign exchange, supplier and recipient are not two establishments of the same person, it will qualify for export of service. It is first exempted, and it will also qualify for export of services, means the refund is available with respect to that. Means they can export without payment of GST, and they'll get the ITC with respect to, the refund with respect to ITC. That is the meaning here. And GST implications on different transactions. Discount involved in bill discounting or check discounting. Discount, any consideration represented by way of interest or discount will be exempted. However, the discount charges, that is documentation charges or any other charges related to this discounting, so that will be taxable. And margin earned on repo or reverse repo transactions, basically repo, reverse repo or short-term money market instruments between RBI and the banks, and in that case the margin is nothing but the interest, and that interest will be exempted. Margin including futures and options. Futures and options are derivative contracts which are traded as securities, and the margin is nothing but the profit. So transaction in securities is neither goods nor services. Due to that reason it is not a supply. Interest or penal interest involved in credit cards, so that will be taxable, because interest on credit card is taxable, so penal interest is also taxable. And even though there is a RBI circular that penal interest should not be there and penal charges should be there, but it is not applicable in case of credit card transactions, trade credits and external commercial borrowings. So due to that reason, so it is still penal interest only in those places. In other place only they should not call it as penal interest, and they should call it as penal charges, and penal charges are liquidated damages which are not compensatory or penalizing in nature, so not treated as consideration. Then balance transfer in credit card or loan transfer from one bank to another bank is pure transaction in money without any separate consideration. So due to that reason it is not a supply. Then next area that we are discussing, number 4, is healthcare services. In case of healthcare services, number 1, healthcare services provided by a clinical establishment or by an authorized medical practitioner or by paramedics, including ambulance service, is exempted. So healthcare services by a clinical establishment, authorized medical practitioner or paramedics, including ambulance, that is one exemption. And next exemption is healthcare service in relation to animals and birds. These are the two healthcare service it is exempted. But under healthcare, entire amount collected will be exempted. But for room charges we have a relaxation. And what is that? Room charges is exempted provided the charges does not exceed 5,000 rupees per day. And here if it is ICU charges, any kind of ICU charges, fully it is exempted. But if it is other room charges up to 5,000 rupees per day, it is exempted. Beyond 5,000 rupees entirely it will be taxable. And healthcare service can be in any recognized system of medicine that can, and even yoga is also considered as a recognized system of medicine. And ambulance services, it may be part of healthcare or not part of healthcare, it is always exempted, but they should be involved in transportation of patient. Then next, healthcare means, so before treatment, that is diagnosis, treatment, care in any system of medicine, and that can be for any illness, deformity, abnormality or any disease, pregnancy, etc. and all. But it does not include 3. Hair transplantation, cosmetic surgery and plastic surgery will not come under healthcare services. But if these 3 are carried out to restore the anatomy of body parts affected due to congenital defects, developmental abnormalities, injury or trauma, then it will come under healthcare services. And what is the meaning of clinical establishment? Any place where the healthcare service is provided. And authorized medical practitioner, who is considered as authorized medical practitioner? A doctor having MBBS degree, so minimum, and registered with medical council is called as an authorized medical practitioner. Paramedics means lab technicians, physiotherapists, etc. And their service also exempted. So renting rooms to inpatients in hospital up to 5,000 rupees per day, and food supply to inpatients is also exempted. Who are inpatients? Those who are admitted in the hospital, so that will be part of healthcare service. Due to that it is exempted. And services provided by consulting doctors to hospitals is also exempted. So hospitals collecting money from the patient is exempted. Thereafter they pay money to the consulting doctors, that is also exempted, whether the doctors are employees or not. If they are employees, anyhow it will be covered under exclusion from supply. If they are not employees, then it will be exempted. Then IVF and ART treatment provided by the clinics, fertility clinics, is also treated as healthcare services and it is exempted. Then last, we have exemption with respect to rehab service. There is a rehab professional, and that rehab professional provides the service by way of care or counseling. Where will they work? They work in medical establishment, let it be government or private or trust-owned medical establishment, their services will be exempted. If they are working in education institutions, let it be government or private or trust, the money received by them will be exempted. What if they are working in some private rehab centers? That is taxable. If it is a government or trust-owned rehab center, then only it will be exempted. So services provided by rehab professionals in private rehab center will be taxable. Then ambulance services, you can see ambulance services provided under National Health Mission. So basically any ambulance service will be exempted. So here state government is providing the ambulance service to the patient. First of all, they will not get any consideration. So there is no question of GST. And suppose if there are private service providers who provide services to the government by way of transporting the patients, so on behalf of the state government, then in that case state government will not collect any money. So therefore no consideration of GST, but the state government will pay some charges to the private ambulance service providers, that is exempted. So remember, let it be hospital run private, like hospital run ambulance or a private hospital, like private hospital ambulance or any private ambulance, if they collect any charges for transportation of patient, that will be exempted. Then when it comes to entry ticket, following entry tickets are exempted. Few entry tickets are exempted irrespective of the ticket price, that is museum. Remember, 3 related to animals: tiger reserve, zoo and wildlife sanctuary. Then 3 places: museum, national park and entry to protected monuments. Then there are total 9 entry tickets which are exempted if the ticket price does not exceed 500 rupees per person. So first 4 related to performance. So dance performance, theatrical performance, concert and musical performance, 4 related to performance. Then 4 events, that is circus, award function and pageant, sporting event. And finally 1 place, that is planetarium. These 9 entry tickets, if the ticket price does not exceed 500, it is exempted. What if the ticket price exceeds 500? Entirely it will be taxable. Then pension services, contribution under Atal Pension Yojana or any state government pension fund will be exempted. Only 2 pension schemes are exempted as of now. One is Atal Pension Yojana, another one is state government operated pension fund. Then point number 7, services by specified organizations. What are those specified organizations? ESIC, Employee State Insurance Corporation, and EPFO, Employee Provident Fund Organization. Then NCCD, National Center for Cold Chain Development, Foreign Diplomatic Mission in India, and Coal Mine Provident Fund Organization. These are the specified organizations. If they collect any amount, that is exempted. But remember, only services provided by Foreign Diplomatic Mission is exempted. Okay, what is a Foreign Diplomatic Mission? UN or international agencies, embassy or consulate. Okay, here you need to remember one important point: import of any services by Foreign Diplomatic Mission will be exempted. Okay, import of any services, import of any services, import of any services by Foreign Diplomatic Mission, Foreign Diplomatic Mission, including OIDR services here. Okay, import of any services by Foreign Diplomatic Mission is exempted. That is UN or international organization is a Foreign Diplomatic Mission. So if they import any services, whatever may be the service, that will be exempted. And next one, charitable and religious service. There is a charitable trust under either 12A or 12AB of the Income Tax Act. If they provide specified charitable activities, the money earned by way of specified charitable activities is exempted. What are those specified charitable activities? Number 1, public health. Public health here refers to doing some awareness about HIV, AIDS, etc., or family planning. So that will come under public health. Then advancement of religion, spirituality and yoga. And number 3, educational programs to whom? Orphans or homeless children, prisoners, mentally physically traumatized persons, or persons over 65 years, greater than 65 years, residing in rural area, not urban area, then it will be exempted. Then environmental preservation. These are the 4 specified charitable activities. By doing that, if the trust earn money, then it is exempted. Otherwise, you need to check for other exemptions. So second point, there is a old age home. That old age home is either operated by government or operated by a trust. And if they are providing boarding and lodging to the old people, who are old people? Aged greater than or equals to 60 years, greater than or equals to 60 years. and the consideration paid by them is up to 25,000 rupees, then that consideration received by them will be exempted. Okay, so 25,000 per month per member, provided that consideration charge is inclusive of charges for boarding, lodging and maintenance. Then number 3, services by any person by way of conduct of religious ceremony. So who will be conducting religious ceremony? So priest, purohit, etc. that is exempted. Services of specified organization. So it should be a specified organization and they should be doing religious pilgrimage. If they collect any amount, that is exempted. Religious pilgrimage is Kailash, Manasarovar and Hajj Yatra. Then next we have incubator and incubatee services. That is, there is an incubator. Incubate is a place where the research is carried out. Incubator is the owner of that particular incubate, and incubatee is the person, an entrepreneur or a scientist who is working in the incubate. So incubator, 2 approved incubators are there, and any service provided by them will be exempted. So one is technology business incubator, and another one is science and technology entrepreneurship park, TBI, technology business incubator, and STEP, science and technology entrepreneurship park. So these 2 are the approved incubators by Government of India. Any service provided by them will be exempted. Whereas incubatee services will be exempted if the consideration does not exceed 50 lakh rupees. And suppose if the consideration exceeds 50 lakh rupees, the excess is only taxable in this case. Not entirely it will be taxable. And 2 conditions: previous year their gross receipt should not exceed 50 lakhs, and this exemption is for a period of 3 years from the date of signing the contract as an incubatee. And see this illustration. Gross receipts of incubatee 60 lakhs minus exemption 50 lakhs. First year they will get the exemption because previous year 0. So by default first year they will get exemption. Remaining 10 lakhs is only taxable value. Second year 40 lakhs and they will get exemption no, because previous year it exceeds 50 lakhs. So second year no exemption. Entire 40 lakhs will be taxable. What about third year? For third year, second year is the previous year. As the previous year does not exceed 50 lakhs, third year they will get the exemption. So 70 minus 50, 20 lakhs is taxable. Fourth year they will never get exemption because the exemption is only for a period of 3 years. And who are the government approved incubators? TBI, Technology Business Incubator, and STEP, Science and Technology Entrepreneurship Park. Then next we have education services. So education services, first point that you need to remember is that any service provided by an educational institution to its students, faculty and staff is exempted. And what is that educational institution? We have 3 categories of educational institution. Number 1, education up to 12th standard or equivalent. It can be in any board, etc. Whereas education as a part of curriculum for obtaining a qualification recognized by law. And third one, approved vocational education, that is ITR, ITC, Industrial Training Center or Industrial Training Center or Industrial Training Institute affiliated to NCVT or SCVT, National Council for Vocational Training or State Council for Vocational Training, and Modular Employable Skill Course. So these are the 3 category institutions. Any service provided by them to its students, faculty and staff is exempted. And what about the application fee or entrance fee, etc.? So our prospectus fee, all these are exempted because that is with respect to prospective student, and even those who complete the qualification and they leave. So that leaving students, they will be collecting TC or migration certificate. For that the charges will be exempted. So but only remember, application fee for entrance or fee charge for issuing eligibility certificate, fee collected for issuing migration certificate to ex-students, that is only exempted under this circular. Then second point is service provided to education institution. In that you need to remember, first, transportation of students. Here educational institution is the recipient. So I am providing transportation services, catering services, security within the premises, housekeeping service within the premises, means I am providing the housekeeping personnel or security personnel, and they will be working within the school premises. So these 4 activities, transportation, catering, security, housekeeping within the premises, but security and housekeeping only within premises, to category 1 institution will be exempted. Then admission to or conduct of examination, all 3 category institutions it will be exempted. Then supply of online educational journals and periodicals, only with respect to category 2 institution it will be exempted. Then so what about services provided to education institution by way of catering services? Anganwadi schools are also treated as education institution. It will come under primary health care. So therefore category 1, and catering service provided to category 1 is exempted. So exemption is provided to services supplied to Anganwadi institutions and by way of serving food, including midday meal scheme under any midday meal scheme sponsored by government, and not necessary that the schools, Anganwadi schools should make the payment. The payment can be from government grants or corporate donations, whatever the case may be. So that will be covered under the exemption. Then next we have third point, Indian Institute of Management, IIM. IIM will be exempted if they offer long-term programs. What is a long-term program? Greater than 1 year, then it is exempted. They may give either degree or a diploma. But if they are offering short-term programs, that is less than or equals to 1 year, then it will be taxable, where mainly they will be giving participation certificate. Then fourth point, if there is an education institution which is conducting entrance examination and for which they collect entrance exam fee, that is exempted. So in this regard, you need to remember, if there is a National Board of Examination and National Testing Agency whose job is only to conduct an entrance examination, and if they pay money, that is if they collect money, entrance exam fees, even that is also covered under education institution, yes. So this National Board of Examination, National Testing Agency is also education institution, and the entrance exam fee collected by them will be exempted. Then amount paid to training providers. There are some training providers under Deen Dayal Upadhyaya Gramin Kaushal Yojana who go to the rural places and provide the skills in the rural places. They will get some money from government, that is exempted. Then next, services provided by National Skill Development Corporation. So they have awarding bodies who will be giving the certificate, assessment agency who will conduct the test, and training body who will design the curriculum, training partner who will do the teaching. And if these people are approved by National Skill Development Corporation, whatever charges that is collected by them for providing the skill courses will be exempted. Then service of assessment bodies under Skill Development Initiative Scheme. Just remember, Skill Development Initiative Scheme, there will be some assessment bodies, they will get money from government, that is exempted. Then affiliation fees. Affiliation fees collected by Central Board or State Board of Education from government schools. It should be either owned or operated or managed by central government, state government, local authority, government authority or government entity. Then that affiliation fees will be exempted. What about affiliation fee collected from private schools? That will be taxable. Affiliation fee collected by CBSE from private schools is taxable. Even affiliation fee collected by universities from any college, government or private, is taxable. We don't have exemption there. And some special points in this regard. Fee collected by ICI, ICMI is exempted as their education institutions. However, fee collected by coaching centers or individual faculties, that is not exempted, that will be taxable. And up to 12th standard, it can be in any board. So it can be CBSE, state board, matriculation, etc. And what about private tuitions? Private tuitions or home tuitions is always taxable. And approved vocational education, we already know ITR, ITZ, affiliated to NCVT, SCVT. And what about maritime training centers? Maritime training centers and aviation training centers. So they are not education institutions per se, but they offer training which is a part of curriculum. So are treated as education institutions, even though they are not per se, but they are treated as education institutions as they are part of curriculum for obtaining a qualification. Now we are moving on to government services. In this government services, we have two parts: services provided by government and services provided to government. The first and foremost aspect we need to know here is that what is the meaning of government, government authority, government entity and government agency. Government means central government, state government or local authority including the union territory. So that is the meaning of government. When we say local authority, panchayat, municipality, corporation, cantonment board, mainly remember, whenever there is a municipal fund or a fund which is available, government fund is available, and if an authority is appointed to utilize that municipal fund or government fund, that will be called as local authority, not government authority. But government authority means a board or body or authority which is established under an act of parliament or state legislature, or the government has invested greater than or equals to 90% in that authority, and mainly that authority will be carrying out the functions under Constitution Article 243G or 243W. Whereas government entity is also similar to government authority, except that government entity is established to carry out the functions as entrusted by the government, not as entrusted by the Constitution. So that's the only difference between government authority and government entity. And we have some examples of government authority, that is RERA, Real Estate Regulatory Authority, CMDA, that is Chennai Municipal Development Corporation, like that, lot of urban development authorities, then TRAI, Telecom Regulatory Authority of India. These are all examples of government authority. Whereas government entity, to carry out the functions entrusted to them by the government, so example PSUs, Power Grid Corporation or Coal India Limited, Central Bank of India Limited, examples. And then government agency. Government agency means government is required to do certain activities which they may not do. They may outsource it to any other person, and the contractors to whom it is outsourced, so they will be called as government agency. And related to services provided by government, we have two: municipality or panchayat activities under Article 243 GRW of the Constitution. Second, liquor license. These two activities are excluded from supply. Other activities of government is covered under supply. In that, for Department of Post, we have only three exemptions: postcard, inland letter, and envelopes less than 10 grams, either ordinary post or book post, that is exempted. In all other case, it will be taxable. Whereas for transportation, we have a separate chart. And when it comes to Indian Railways, for Indian Railways, we have total 5 exemptions. Number 1, if Indian Railways, they are providing transportation of passengers in other than first class or AC, that is exempted. Then notified goods transported in Indian Railways: agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural and man-made disasters, and defense and military equipment, these goods. And third, services to individuals. So what services to individuals? By way of sale of platform ticket, clock room charges, waiting hall charges, battery operated car services, that. And number 4, services provided by one zone or division to another zone or division. And finally, maintenance services provided by Indian Railways to special purpose vehicle in relation to the infrastructure owned by the special purpose vehicle. So basically, a special purpose vehicle is an entity which is created for the purpose of infrastructure creation for railways, and that entity will give the infrastructure to railways, for which railways will pay some charges during the concession period, so for a particular period, and that charges collected by the special purpose vehicle is exempted. So that will come under services provided to government. So services provided by special purpose vehicle to Ministry of Railways by allowing them to use the infrastructure built and owned by SPVs during the concession period against consideration. This is services provided by SPV to Indian Railways. Now, what Indian Railways will do, as the infrastructure was created by SPVs, they may not have the people to do the maintenance. So Indian Railways will do the maintenance of their infrastructure. So Indian Railways provide maintenance service to SPVs in relation to infrastructure owned by them during the concession period. So this is a chart connecting that there is a special purpose vehicle and there is Indian Railways. First, special purpose vehicle will give the infrastructure, right to use the infrastructure owned by SPV, for which Indian Railways will pay the consideration, and that consideration will be exempted. This is for the concession period, say for a period of 5 years, 10 years, like that. And what happens is that Indian Railways will provide the maintenance service with respect to the infrastructure of SPVs, for which SPV will pay the maintenance charges, that is also exempted. That is this part. When it comes to Indian Railways, for airport or port services, we don't have any exemption, fully it is taxable. Other services to other than business entities exempted. Other services means other than these 4 services provided to other than business entity, that is individual, will be exempted. If it is provided to business entities, we have general exemption, specific exemption, general exemption, other cases it will be taxable. So that is a continuity in the next page. Services provided by government to business entities other than Department of Post, Transportation, Indian Railways, airport or port services. Specific exemptions, we have 14 specific exemptions. Number 1, RTI charges, Right to Information Act charges, interdepartmental service, that is one department of central government or state government to another department of the central government or state government. Then third one, assignment of right to use natural resource. First one is telecom spectrum assigned before 1/4/2016, both one-time charges as well as annual royalty. And fourth one, assignment of right to use natural resources before 1/4/2016, only one-time charges. Then 5, assignment of right to use natural resources to an individual farmer, it can be assigned any time. So these 3 are related to assignment of natural resources. Then 6th one, fee for birth certificate, death certificate, driving license, visa and passport, and registration charges under any law, that can be under income tax or GST or Companies Act, etc. Registration charges, including property registration charges, vehicle registration charges, exempted. Then safety certificate charges and merchant overtime charges under customs And next, consideration for tolerating an act. So government is collecting some money for tolerating your act, but very, very important is that it should not be liquidated damages which are compensatory in nature or penalizing in nature. So if it is compensatory or penalizing in nature, it will not be treated as consideration. So that's what I have given: liquidated damages collected by the government which are compensatory or penalizing in nature are not treated as consideration and does not constitute supply. So what we need to see is only other than that, if any money collected, for example, government made a contract and the contract, that is, you entered into contract with the government and you have not completed the work on time. So it got extended and government is tolerating your act of extension for which they are collecting charges, that is exempted. That is the point here. Example, charges for delay in completion of construction and demurrage charges. Demurrage charges is collected under customs in case where the imported goods are not cleared within the permissible time. The customs department will agree, that is the Port Trust of India will agree to your delay for which they are collecting some money, that is demurrage charges, but it is exempted. It will not come under compensatory or penalizing in nature, it will be others. And next, guarantee commission for guaranteeing the loan taken by PSUs, national permit charges or state permit charges. Then services to excess royalty collection contractor. An excess royalty collection contractor is appointed to collect the variable royalty and pay fixed royalty. To the extent of that variable royalty, ERCC not required to pay. Say variable royalty 40 lakhs and the fixed royalty paid by ERCC is 50 lakhs. Now 40 lakhs anyhow leaseholder will pay GST under RCM. So ERCC is paying extra 10 lakhs. On that extra money only ERCC required to pay GST, which means services provided by government to ERCC to the extent of variable royalty is exempted. Finally, share of profit petroleum. Profit petroleum is nothing but the profit arising out of the mining contract given to the leaseholder for extraction of petroleum crude or natural gas. In this profit, a share will go to the leaseholder and a share will go to the government. That share which is received by the government is exempted. So, share of profit petroleum for assigning right to extract petroleum crude or natural gas. And in this connection, we have cost petroleum. Cost petroleum is recovery of expenses by the leaseholder that will not be treated as consideration and consequently it is not a supply. Then we have two general exemptions. Number one, apart from these 14 points, any other service provided by government to business entity other than renting of immobile property to a business entity whose turnover during the previous year does not exceed threshold limit is exempted. So this first general exemption is not applicable for renting of immobile property. Second general exemption is applicable for renting of immobile property, but there is a monetary limit, that is the consideration per invoice should not exceed 5,000 if it is a continuous supply of service, that is a service which takes more than 3 months to complete and involves periodic payment obligations, then it should be taken as 5,000 rupees per annum, then only it is exempted. So if it is covered under specific exemption, don't say anything, always it is exempted. If not covered under specific exemption, then apply the general exemptions. If it is neither specific exemption nor general exemption, in other cases it will be taxable. Wherever it is taxable, you need to check whether it is renting of immobile property to an unregistered business entity, then it will be FCM, or other cases it will be RCM. Okay, so renting of immobile property to an unregistered person is FCM, otherwise RCM. And also remember, this Department of Post to airport or port services is always FCM. Only these other services to business entity will be covered under RCM. Means 5 cases it is always FCM. So generally services provided by government to business entities RCM, but in case of Department of Post, Transportation, Railways, Airport or Port Services and renting of immobile property to unregistered business entity, it is FCM. And business entity means what? Any person engaged in business, so even individual farmer will fall under business entity. Then when it comes to services provided to government, services provided to government, so any person providing services to the government authority. First is government authority. We already know government authority means authority established under an act of parliament or state legislature, or authority in which government is owning so 90% or more. So any person providing service to government authority, just remember few activities are only exempted. What are they? So slum improvement and upgradation. So just remember slum improvement, upgradation, water supply, sanitation conservancy, solid waste management and healthcare. So these water supply, sanitation conservancy, solid waste management, public health and slum improvement, these activities provided to government authorities only exempted, all other activities will be taxable. Same way, second point, services, any service provided by government authority to any person will be exempted. So these are the two exemptions we have for government authority. One is service provided to government authority, another one is service provided by government authority. Then what about the services provided to government? Few activities are exempted. Number one, pure services. That is, first of all, government is required to do certain functions as per Constitution, Article 243 GRW, and they outsource it to any person. That person providing pure services will be exempted. What if that person provide a composite supply of goods and service? That is also exempted, provided the value of goods does not exceed 25% of the total. Then services provided by fair price shops against a commission, that is exempted. Then training program provided wherein the expenditure borne by government is greater than or equals to 75%. The entire training program is exempted. Then import of service for non-commercial purposes. Non-commercial, that is other than business. So any import of services other than OIDR services for other than business purpose will be exempted. Then apart from this, other activities of government, services provided to government will be taxable. Here when we say government, whether it includes public works department, yes. And what about these services provided to government? It will be covered under the first point, pure services. All above service like water supply, solid waste management, etc. provided to government falls under pure service and it is exempted. Then next one, services provided by government authority. So there is a government entity. Government authority already we discussed, government entity. Any service provided by government entity to any person. So either a government or person specified by government for which they get a grant, that grant received will be exempted. So government entity providing services to government or person specified by government for which they get a grant, that is exempted. What about by government authority? We know that already everything is exempted. And is RERA government authority? Yes. RERA is considered as a government authority and statutory collections made by them will be exempted. And government entity is not same as government authority. So due to that reason, whatever exemption for government authority not applicable to government entity. Then we have some special points by way of circulars. Number one, accommodation services provided by Air Force mess or any other government mess to its personnel will come under other services to other than business entity. Therefore, it is exempted. Then when wheat flour is supplied by any person to government for public distribution, even though it is Article 243 GRW activity, but the value of goods exceeds 25% of the total, so that exemption is not applicable. Same way, sanitation services provided to Indian Army, even though sanitation service is covered under Article 243W, but it is not the work of Indian Army to provide sanitation service to general public. So therefore, when they receive sanitation service, that exemption of pure services under Article 243 GRW, this point will not be applicable to government. And in case of sanitation service to Indian Army. Then same way, facility management services, that is housekeeping services provided to local authority. It is not the job of the local authority to do the housekeeping services. So when they receive the housekeeping services, it will not come under the pure services exemption. Finally, there is Delhi Development Authority. It is like a urban development authority, not a local authority. So it should be treated like a government authority and any service provided by them will be exempted. So these are the circulars we have in the context of government services. Now we are moving on to renting. So renting including leasing, licensing, etc. So all kinds of renting is covered here. So renting divided into two broadly, movable property, immobile property. Again immobile property divided into land and building. When it comes to renting of movable property, we have so exemptions, that is 4 exemptions we have. Number one, hiring of motor vehicle, and all these 4 are related to motor vehicles. Hiring of motor vehicle that can carry more than 12 passengers to a state road transport corporation, or hiring of electric motor vehicle that can carry more than 12 passengers to a local authority, or hiring of motor vehicle that can carry goods to a GTA, and finally hiring of bus to a person who is providing. So I am hiring a bus to you, you are providing transportation service to educational institution up to 12th standard or equivalent. These 4 renting of motor vehicle is exempted, otherwise all other renting of movable property is taxable. When it comes to renting of immobile property, for renting of building, we have 3 exemptions. Number one, renting of residential property for residential purpose to an unregistered person. Number two, renting of residential property for residential purpose to a registered individual for their family stay. Number 3, accommodation services, but that accommodation should be for a continuous period of minimum 90 days, and the charges per month should not be more than 20,000, that is less than or equals to 20,000 per person per month. So then it is exempted. These are the 3 exemptions. When it comes to land there are 2 exemptions. So we need to remember first, supplier. First exemption, who is the supplier? Government is the supplier and recipient is government authority or government entity. What is the type of lease? Any type of lease, either long-term lease or short-term lease. And what is the type of land that should be given on lease? Any type of land that can be given on lease. And what is the amount of exemption? Entire amount, full upfront amount as well as annual lease rental, everything will be exempted. That is the first exemption. Whereas second exemption related to the land. So who is the supplier? Supplier should be either SIDCO, State Government Industrial Development Corporation, or entity in which government holds 20% should be the supplier, and recipient should be any person who is in need of, like plots. And what type of land should be given on lease? Either industrial plot or plot for development of infrastructure for finance business. And what is the type of land that is exempted in the second point? Long-term lease of land greater than or equals to 30 years. And what is the amount of exemption? Only upfront amount. Only upfront amount is exempted, including preferential location charges, but not annual lease rentals. Then next we have renting of precincts of a religious place. There is a religious place meant for general public, which is registered as a trust, either charitable trust or a religious trust, and the precincts are given on rent. For what purpose? Accommodation. If the charges are up to 999 per day, it is exempted. If it is for hall, then up to 9,999 per day, it is exempted. If it is for shop, up to 9,999 per month, then it will be exempted. Then when it comes to sports services, we have three exemptions. Number one, if sponsorship money is collected by a recognized sports body, that sponsorship money collected will be exempted. Here sports body is the supplier, organizer, and the one who is paying the sponsorship money is the recipient. So if that sports body is a recognized sports body, then the sponsorship money is exempted. What are recognized sports bodies? We have total 6 recognized sports bodies: National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services Culture and Sports Board, and Panchayat Sports Board. That is the first exemption. Second exemption is services provided by individual. So individuals as player, referee, umpire, coach or team manager, only to recognized sports body is exempted. All others will be taxable even though to recognized sports body. And next, one recognized sports body to another recognized sports body is also exempted. Next, we have RCM. For RCM, two conditions: supplier should be other than body corporate or firm, and recipient should be, supplier should be other than body corporate. That's it, not firm. Supplier should be other than body corporate and recipient should be body corporate or firm. Then it will be covered under RCM. That is this. Next, services by unincorporated association to its members. There is an unincorporated body, they provide services to the members. If that unincorporated body is a trade union, industrial labor union or agricultural labor union, whatever money that they collect from their members, that is exempted. Suppose if the association is providing service, that service is covered under any other exemption, then also the money collected towards that service is exempted. And next we have membership fees or maintenance charges collected by a resident welfare association. If the charges is up to 7,500 per month per member, then it is exempted. If the charges is greater than 7,500 rupees per month per member, then entirely it will be taxable. Then any other association, if the charges is up to 1,000 rupees per annum per member, then it is exempted. Beyond 1,000 rupees per annum per member, entirely taxable. In this regard, we need to understand, if the charges exceed 7,500, it will be taxable entirely, but the overall aggregate turnover should have crossed the threshold limit for registration, then only they will pay GST. If the Resident Welfare Association collects an amount exceeding 7,500 per month per member, then entire amount is taxable, even though there are some contrary judgments. Now there is one important circular in this regard. Usually electricity charges will be collected by the association from the members. It can be any association and they will be collecting it from the members. What is the treatment of that electricity charges? Suppose if the electricity bill is in the name of the member, but association has paid it and has recovered it from the member, then automatically association will become a pure agent, and therefore that electricity charges recovered will not be included in the value of that maintenance charges for computing 7,500 rupees point. then suppose if the bill is in the name of the association and it's a common area expenses and common area electricity expenses, if they recover it from the members, even then whether they are recovering the actual amount or some ad hoc amount, if they recover the actual amount, then it is deemed as pure agent, then also that electricity charges will not be included. On ad hoc amount, some 1,000, 2,000 like that and all, if they are collecting, irrespective of the actual bill, actual electricity bill that the association pay, irrespective of the actual electricity bill that the association pay, if they collect on ad hoc basis some amount, so that will be included in the value. The pure agent point will not be applicable. And this is not only in case of maintenance charges, even for renting also it is applicable. And electricity, even if billed separately, so then it will be treated like a composite supply and it will be forming part of rent or maintenance charges. Next, we have transportation of passengers. In transportation of passengers, when it comes to railways, we have 3 exemptions. Number 1, other than first class or AC, then metro, mono or tramway, and services to individuals by way of platform tickets, clockroom charges, waiting hall charges, and battery operated car services. And airways, we have 2 exemptions. If the starting point or ending point is in northeastern state or Bagdogra and West Bengal, then it is exempted. Northeastern states means MMTN, Assam, Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim, Arunachal Pradesh and Meghalaya. Then second exemption is that consideration received from government towards viability gap funding, but only from government the consideration received is exempted. This is not a subsidy, and this consideration is exempted for a period of 3 years from the date of commencement of operations in that airport, that regional connectivity airport. Then waterways, we have 2 exemption. Inland waterways fully exempted. Coastal waters means vessel, that is seaways, that is also exempted, provided it is between places in India and the other than tourism purpose. Coastal waters within India other than for tourism purpose, and it can be operated either by government or by a private cruise ship. Then roadways, when it comes to roadways, we have 3 exemptions, that is non-AC stage carriage, non-AC contract carriage other than tourism or hire, and metered cab or auto rickshaw. But if these 3 are through e-commerce operator, then it will be entirely taxable. For example, normal auto is exempted, Rapido or Ola Auto will be taxable, and transportation of passenger other than above is taxable, like chartered flights or bullock carts, horse carts, ropeway, cable car, etc. that will be taxable. Then there should be a difference between renting of motor vehicle versus transportation of passenger. If the vehicle is at the disposal of the recipient for a period of time, then it will be called as renting of motor vehicle. If the vehicle is taken for per trip or per voyage, then it will be coming under transportation of passengers. So that you should know under which point you need to check for the exemption. Then when it comes to transportation of goods, we have exemption, that is transportation of goods by railways. Notified goods are exempted. Those notified goods are the same 6 goods that we have, that is agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural and man-made disasters, defense and military equipment, those 6. And the same specified goods, even if transported by waterways in coastal waters, also exempted. Even for GTA also it is exempted. In 3 places specified goods will be exempted. One is railways, then waterways in coastal waters, and GTA, goods transport agency. Then when it comes to airways, we have only 1 exemption. Transportation of goods by airways from outside India to India will be exempted, but waterways we don't have that exemption. For waterways only 2 exemption. Inland waterways fully exempted. Coastal waters within India only that specified goods is exempted. Then when it comes to roadways only 3 are taxable. Remaining transportation of goods by roadways is exempted. GTA, courier and instant local delivery. These 3 are only taxable, remaining and all exempted. So other than GTA, courier or instant local delivery by e-commerce operator or through e-commerce operator will be exempted. So whether instant local delivery by e-commerce operator is taxable, yes. For example, Blinkit, Zepto, etc. will do the instant local delivery and collect some delivery charges, that is also taxable. And some people will send the parcels from one location to another location, and a driver through Rapido or portal is taking up the parcel, that is instant local delivery through e-commerce operator, that is also taxable. And transportation of goods by waterways from outside India to India or India to outside India, we don't have any exemption, that will be taxable. Then for GTA, goods transport agency, we have 3 exemptions: transportation of specified goods, or if the recipient is individual, HF, AJP or trust, not having factory and they are unregistered, or if the recipient is registered only for deducting TDS, then it will be exempted. These are the 3 exemptions. And GTA has 2 options to pay GST under FCM or RCM. If they opt for FCM, then only it is FCM, and that will be for the financial year. They have 2 rates, 18% with ITC, 5% without ITC. This is for GTA, not for the recipient. Whether they charge 18 or 5, the recipient can take ITC, but GTA cannot take ITC if they are charging 5% on that inward supply, and that 18% and 5% they can decide with respect to each invoice. Okay, whereas with respect to each financial year, FCM versus RCM, that is this, and they need to exercise this option between 1st January to 31st March of the preceding financial year. And who is a goods transport agency? Any person engaged in transportation of goods by roadways, only roadways, and issues a consignment note by whatever name called. Suppose if they are not issuing consignment note, they are not called as GTA, other than GTA, and it may be exempted. Because we have other than GTA, courier and instant local delivery, that is exempted under that particular category. What does consignment note contains? It contains the details of goods, vehicle number, and consignor details, consignee details, etc. And the other name for consignment note is BILTY, B-I-L-T-Y, BILTY. Then we have a CBIC circular. There is a owner of a vehicle. That owner of the vehicle is providing non-AC contract carriage, that is non-AC vehicle, to the person requiring vehicle for transportation. If this vehicle is operated on a predetermined route, on a predetermined schedule, it will come under the category of contract carriage other than tourism or hire, and it will be exempted. Suppose if the vehicle is at the disposal of the recipient for a particular trip or voyage, then it will come under contract carriage for tourism or hire, and it will be taxable. And always FCM, we don't have RCM. Whereas if it is given for a period of time, then it will be renting a motor vehicle and it will be taxable. And we have 3 conditions. If all the 3 satisfied, then it will be RCM. Supplier should be other than body corporate, recipient should be body corporate, rate of GST 5%, then it will be RCM, otherwise it will be FCM. Stage carriage means a vehicle which transports passengers where they can board at any stage during the journey. That is what stage carriage. On the other hand, contract carriage means point to point travel. Then there is one more point. Usually transportation of minerals within a mining area by vehicles, that will not come under transportation of goods, that will come under renting of motor vehicles. So because transportation of minerals within a mining area by vehicles deployed with driver for a specific duration, the vehicle is at the disposal of the recipient, so you treat it as renting a motor vehicle but not transportation of goods. So therefore it will be coming under taxability. The next one is import of services. Import of service is divided broadly into 2, OIDR services and other than OIDR services. Any OIDR service imported will be taxable, but of course we have an exception, that is like import of any service by UN or international organization will be exempted. So leaving that. Apart from that, other cases, import of OIDR services will be taxable. And who will pay GST? If it is imported by non-taxable online recipient, the liability to pay GST is on supplier under FCM. If it is imported by other than non-taxable online recipient, then it will be taxable under RCM. Whereas other than OIDR services, if imported by non-taxable recipient, then it is exempted. By other than non-taxable recipient also we have an exemption, that is Indian establishment of a foreign airline importing services from their head office. Say Singapore Airlines is having a branch in India, importing service from their head office without consideration. That will be exempted provided there is a reciprocal exemption given by Singapore government to our airlines which is there. So that Ministry of Civil Aviation should certify, then only it will be exempted. Other cases it will be taxable under RCM. Basically, import of service will come under RCM, but only in one case it will be FCM, that is OIDR service by non-taxable online recipient. So what is the meaning of OIDR service? Any service which takes place online and is mediated by information technology over internet, then it is OIDR services. It includes digital marketing, that is advertising through internet, providing cloud services and e-books, content, OTT platforms, or digital data storage like cloud storage, and includes even online gaming, not online money gaming but online gaming. And any service which is through online, you can understand, that is it can be rendered only through online, then it will be called as OIDR services. And who is non-taxable recipient? Because import of other than OIDR service by non-taxable recipient is exempted. So who is non-taxable recipient? 3 people: individuals, trust, government. Usually individuals will trust government. Okay, individuals trust government. Individuals should be unregistered and importing for personal purpose, and trust can be either registered or unregistered under GST, importing for charitable activities. Government again either register or unregistered under GST, importing for non-commercial purpose, that is other than business or commerce, that is non-taxable recipient. Non-taxable online recipient means any unregistered person or a person registered only for deducting TDS, so they will come under non-taxable online recipient. And wherever GST is payable under RCM, they have to compulsorily get registered, and even the supplier liable to pay GST under FCM, OID or service also compulsorily required to get registered. Whatever GST paid under RCM can be taken as ITZ, provided the conditions for availment of ITZ is satisfied. Then, whether the loan taken by a Indian affiliate, there is an Indian company which is taking loan from its foreign related company, so that will come under import of services, not banking services. Generally, import of service, it will be taxable, on which they need to pay GST. But if they take loan locally from a related company, so then it may be coming under banking and financial service, because of it the interest is exempted. So in order to bring it on parity, what does the law say? If there is a related company in India which is taking loan from their related company outside India, and if the consideration is only interest or discount, then it is not a supply. If it is some other consideration, then it will become supply under 71B, and it will be chargeable to GST under RCM, that is this. If the consideration for the loan is interest or discount, it is not a supply, and we don't have to bring in rule 28, that is related party transaction. Suppose if the consideration for the loan is processing fee, administration charges in addition to interest or discount, then it will be supply under 71B, and it will be chargeable to GST under RCM, because it's import of service other than OIDR by other than NTR, and even the value will be determined under rule 28. Then same way, if there is ESOP, ESPP or RSU taken by subsidiary company from their holding company outside India, and this is nothing but securities, and for that if they pay only the cost, that is not treated as supply. In case of cost to cost reimbursement by domestic subsidiary to its foreign holding company, not treated as supply, and there is no GST liability, because it will be transaction in securities without consideration. But to maintain these ESOPs, ESPPs, RSU, if some extra charges is collected by the holding company from subsidiary company, then it will be treated as services and chargeable to GST under RCM by the subsidiary company, domestic subsidiary company. Then next, we have construction services. In that the first point, construction, only construction, not repair. Construction of an individual house otherwise than as a part of complex is exempted, and individual house means house occupied by a single family, and it should be only pure labor contract, not works contract. Second point, construction, repair, alteration in relation to beneficiary led individual house under Pradhana Mantri Awas Yojana or Housing for All mission, then it is exempted, but both construction as well as repair. And here again it should be pure labor contract but not works contract. Then third point, in case of sale of flat including the land, so then in that case towards the land there is 1/3 reduction. So towards UDS, undivided share of land, 1/3 of the gross value of the flat. We need to see the total consideration received for the flat. In that 1/3 will be exempted towards land or undivided share of land when the gross value includes the value of land. Then we have TDR, FSI and long-term lease. In case of TDR, FSI and long-term lease, proportionate to the residential units booked before completion certificate or first occupation, that to that extent it is exempted. So landowner is giving TDR, FSI or upfront amount towards long-term lease, for which the builder is paying the money. So proportionately there is an exemption. What is it proportionate? Value of inward supply of TDR, FSI and upfront amount of lease into 18% into carpet area of the residential units booked before completion certificate or first occupation, whichever is earlier, divided by total carpet area. To that extent it is exempted. For example, value of inward supply of TDR, FSI 10 lakhs, 10 lakhs into 18%, 1,80,000. But now in that 1,80,000 there is an exemption. We need to see how much is the area of flats, residential flats booked before completion certificate, 28,000 square feet, divided by total carpet area of the project including commercial. So that is 50,000. So 1,80,000 into 28 divided by 50, 1,800,000 is exempted. So remaining 79,200 is GST payable under RCM by the promoter or builder. Then what is the taxability of preferential location charges? Suppose if that preferential location charges is collected at the time of sale of flat itself, then whatever is the treatment applicable for construction, that will be applicable for preferential location charges, because it will be like a composite supply, treated as construction service by applying composite supply and taxable based on construction service. Suppose if the entire money is received after obtaining completion certificate or first occupation, whichever is earlier, then it is not a supply. In other cases, GST will be payable. Suppose if this preferential location charges is paid independently, separately, without respect to the construction service, then it is taxable separately as supply of service, where the rate of GST will be 18%. Then next we have advocate or arbitrator services, and in case if the supplier is normal advocate or firm of advocate or senior advocate or arbitrator, and they provide service to a person other than business entity, in all these three cases it is exempted. If they provide service to government, government authority or government entity, all these three cases it is exempted. If they provide service to business entity whose aggregate turnover during the previous year does not exceed threshold limit, in all these three cases it is exempted. In other cases it will be taxable. And here, if normal advocate or firm of advocate provides services to another advocate, including senior advocate or firm of advocate, it is exempted. And senior advocate, if they provide service to another advocate, don't see that another advocate or firm of advocate as the recipient, see the ultimate litigant, applicant or petitioner as the recipient, and accordingly we need to determine taxable or exempted. But arbitrator to another advocate is not possible. And if the advocates, that is either normal advocate, firm of advocate, senior advocate or arbitrator, if they provide service to a business entity whose turnover during the previous year exceed threshold limit, then it will be taxable. Wherever it is taxable, it will be covered under RCM. That's what always advocate or arbitrator service falls under RCM if taxable. Then services provided by senior advocate to individual advocate or firm of advocate is not outright exempted. We need to see who is the ultimate litigant, applicant or petitioner. If they are individual other than business entity, then it is exempted. If they are government, it is exempted. If they are business entity whose turnover during previous year does not exceed threshold limit, then it is exempted. Otherwise, it will be taxable. And again, senior advocate will not pay. That business entity will pay under RCM. Also remember, if senior advocate imports some services for which they need to pay GST under RCM, if at all they have something, they are compulsorily required to get registered. But as per section 23, as their outward supply is exempted or covered under RCM, section 23 overrides section 24 and they are exempted from registration. Then finally we have exemptions under IGST and miscellaneous exemptions. In these exemptions under IGST, first point, if there is a service for which service provider and recipient both are outside India, the service is exempted. Second, there is an Indian tour operator who is providing tour operator service to a foreign tourist in relation to the tour conducted entirely outside India, then it will be exempted. So tour operator service is intermediary service, and now the place of supply changed. The place of supply is location of recipient. The place of supply is now location of recipient, and therefore it can be regarded as export of services, because there is an Indian tour operator who is providing tour operator service to a foreign person. Indian tour operator to a foreign national, means section 13. Intermediary service now general provisions. So location of recipient, so it will qualify for export of services. That is this point. Then next, suppose if the Indian tour operator is providing tour operator service to a foreign tourist in relation to tour in India, then it is not exempted, it will be taxable. What if partly in India, partly outside India? Proportionately it is exempted. To what extent? Total consideration into number of days tour outside India divided by total number of days, or total consideration into 50%, whichever is lower. That should be taken as exemption. And here if the time spent is greater than or equals to 12 hours, you should take it as full day. Less than 12 hours should be taken as half a day. Then next, fourth point, services provided by intermediary. I am an intermediary, I am connecting seller outside India, buyer outside India, and I get a commission. That commission will be exempted. Goods. Seller of goods outside India, buyer of goods outside India, I am connecting, I get a commission. That commission is exempted. Then miscellaneous exempted services. Suppose if I am transferring business as a going concern, so full business, lock, stock, barrel, if I am transferring, that is exempted, either part thereof or in full. Then supply of service associated with transit cargo to Nepal and Bhutan. So Nepal and Bhutan, if the goods are unloaded in India and taken to Nepal and Bhutan, it is transit cargo. For the transit cargo, if you provide any service, it is exempted. It also includes the return journey if the vehicle is returning empty. Then service by way of collecting or providing news by independent journalists, Press Trust of India or United News of India. So just remember these three people getting money is exempted. Then public libraries lending fees will be exempted. And suppose if there is an organizer who is conducting business exhibition outside India, that is exempted. Then public conveniences like public toilets, the money collected will be exempted. Then toll charges will be exempted, including overloading charges or charges for not having functional fast track. But remember, toll charges collected by way of annuity is not exempted, that will be taxable. And there is a performance artist who is performing in folk or classical art form of music, dance or theatre. If the consideration per performance does not exceed 1,50,000, then it is exempted. However, the exemption is not available if they are acting as a brand ambassador. Then we have training or coaching in recreational activities. Training or coaching in recreational activities, if it is arts by an individual, then only it will be exempted. And if it is even culture, only by individual it is exempted. If it is sports, only by a charitable trust it is exempted. Then next, satellite launch services to any person is exempted, and by any person to any person. And service of transmission and distribution of electricity, but very important point, that should be by electricity transmission or distribution utility, then only it is exempted. Not only electricity, its incidental and ancillary activities like shifting of meter, release of connection, all those things also exempted. Then research and development services. So there are some research and development services provided against consideration in the form of grants from government entity or research association or university or college. I am doing some research, I am getting some consideration from the government entity or research association, that money received by me will be exempted, or even any university or college. Then services by way of electricity distribution up to the tube well of the farmer. A farmer wanted an electricity connection, so from the main road to the farmer's tube well, if the electricity connection is laid down, whatever money that is collected, that is exempted. Then one more point is also there, that is, if there is a distinct person in India and another distinct person outside India, that is, you have establishment outside India, there is establishment in India and establishment outside India, and if the place of supply is determined under section 13, and it will be exempted. Okay, if these two establishments belongs to the same person. For example, there is head office in India, branch office outside India, and the place of supply is outside India under section 13, and this particular service is exempted. It will not become export of service. You know why? Because in export of service there is one condition that these two establishments should not be establishments of the same person, like that. That's why it will not qualify for export of service, but it is exempted. What is that? If there is establishment of a person in India, establishment of a person outside India, and the place of supply is determined under section 13 and it is outside India, then in that case the said service will be exempted. Like that, one point is there. Okay. So these are the miscellaneous exemptions. With this, the summary or revision related to exemptions we completed.